Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Thursday, and it's July 21st. Hope you guys are having a wonderful day. We do got a couple economic news releases scheduled for today, and we'll jump right into it. We'll start off with the weekly jobless claims. So last week it came at 260,000, and this week it came in actually at 253. So better than expectations. We've been kind of keeping to this range the last couple of weeks here, so this has been obviously good news that fewer people are applying for unemployment. Hopefully it's not due to people pulling out of the market, which we saw about back in May, June, but hopefully we're seeing people come back into the market. Philly Fed, this is manufacturing in the Philadelphia region. We had anything above zero is considered expansion, anything below considered contraction. So as you can see, there's a contraction here, but back in June we had a 4.7 on there, and the forecast is supposed to be just dipped a little bit to 4, and it dipped all the way down to negative 2.9. So Philadelphia obviously contracted, and I believe if I remember right, Empire did the same thing. So that Northeast region not faring so well in terms of manufacturing. However, on the existing home sales, we had a 5.51 million in the month of May. And then it was supposed to dip a little bit in June at 5.48, which they expected. It actually went upwards to 5.57. So it went up about 1%, but also on top of that, from year over year, it's up about 3%. So home sales is still trudging along through all this amok, basically, in what we call an economy here, and what's kind of helped supporting or driving this economy here in the U.S. here. We do got leading indicators. This kind of helps us give us some forecasts of what's coming ahead for our economy, and it's looking a little bit more positive. We had a negative 0.2% in May, and it rose to 0.3%. So it looks like things are going to hopefully get a little bit brighter here. Today's stock market's a little bit mixed. It looks like it could be potentially taking a breather, especially since the Dow and S&P has been getting at record highs. That it may be about time that they may have a breather here, and some investors may start looking to maybe pull back on their purchases and look for discounts when the market pulls back in the coming days as well. And of course, we have some earnings reports that are factoring into our data that we just released previously. Today also, the ECB had their meeting and gave their announcements. They left rates unchanged. Basically said they're going to continue the purchase of their bonds over there up until at least March 2017. They will continue to accommodate rates at the same levels or possibly even lower. And then also same thing with the bond purchases up until March 2017. And possibly even longer to try to get things moving. And of course, it will hopefully have a more clearer picture as to what's going to happen over there once the UK starts their plans to exit from the East European community, and how things are going to play out. So that will probably be upcoming months as they get the new prime minister and then they exercise Article 50. Bond market, we're down, so this is going to be real important here to watch here, because now we're up, just dipped below the 25-day moving average, and this has been a pretty tough, as we talked about yesterday, this has been a tough resistance and floor, which we were talking yesterday, has been pushing us up. So as you can see right here, it's kept us above here, and even right here helped keep us above. And right now we're opening up a little bit below there, about 6 basis points from when we left off yesterday. As we start doing this, it did pull back up to 0, so hopefully it's right about the top level here. We may get a little help today with the Fed, as they're going to be purchasing some mortgage-backed securities and treasuries at their auctions later today. That could help drive up the bond market, which might help us out here. But this isn't boding well. If we can get above this, it will help us out here, but we don't want to keep testing this and break below, because the next resistance level obviously is here at 103 level, and we could potentially, even if we break below that, we could potentially touch down to 103.50ish level range, or 102.50 range, and cover it and come back and fill this gap that we opened up when we first started this whole Brexit scenario here. Okay, so be careful. Right now, as you can see from the highs, we're about a half a point difference. Difference from the highs of the best we've seen here. So the difference in pricing should be about a half a point. Okay, folks, again, be careful. Today we're a little bit off, but we got to be very careful, and hopefully we'll get that back to above that floor of support, the 25-day moving average, to help us get boosted up higher, and then hopefully take advantage of the breather in the stock market, which a lot of that money typically goes into the bond market, and get a little bit of pricing over the short term here. All right, have a great day. Thanks so much for watching. Bye-bye.